Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday, the 27th of January. So, let's, before I look at the current markets, let's just discuss briefly the Fed action, the Fed fallout, as I referred to it as being. Well, we're seeing that in the markets at the moment, but basically they've signalled that they will be increasing interest rates as early as March. Early March, so that was pretty much expected and it's pretty much priced in. What they have also done is that, well, they're continuing with quantitative easing for now, which seems a bit of a strange thing to do, but there we are. That's a bit of the slight surprise in the markets, but it's supporting the country, I suppose, to a degree. So that's what we've got running at the moment. They're going to continue running with a quantitative easing, I guess, until March, at which time they will be using, and they've suggested that interest rate increases will be the tool they will use to get inflation down. So there we go. That's the Fed. The fallout from that, well, is we're seeing a stronger dollar this morning, and let's just bring up the calendar for today, and there's little in the way of news until the advanced GDP coming out later. I would expect that advanced GDP will not be showing anything massively different. It could be lower, it could be higher. The Fed would have surely seen the figures beforehand, or the estimated figures, so I'll be surprised if there's much in the way of shock in there, but we could still get some volatility in the markets at 130 as traders latch on to the data. Aside of that, well, then durable goods has gone off the heat a little bit of late, although it might start picking up as we run into a more normalised market maybe. Pending home sales, well, nothing at all. I didn't expect there, so it's really news around 130 may get some volatility to watch out for. Okay, let's have a look what's happened then. As I said, it is the fallout. Talking of falling, the euro fell. And is continuing to fall this morning. It's actually broken out of its original range. It was sitting through the whole of December. We've dropped below that now. There's potential support into November's support is the near-term support side of that. In terms of support, I've got a monthly S2 pivot there. Let's just go back a step and look at what I'm looking at here. I've been bearish and keep on talking about being bearish on the euro regardless of what it does with its little rallies. I'm sort of expecting a break of these lows, and then a more of a continuation as we're in this sort of wave structure, and this wave structure could see us going down to the 108 sort of area. Okay, but let's not get ahead of ourselves. That's just if we get sort of equal throws. What do I need at the moment? I need a retrace to get into any new positions. Got an existing from a week or two ago, but to get into this market, I need some sort of retracement. I do not want to be under any circumstances buying it at the moment, even intraday wise in short-term markets. I do not want to be buying this. But you can see where the money's going. It's squeezing any longs. It's sort of sitting in there. Sorry, any shorts, longs, even longs. It's squeezing the longs, and it's squeezing the life out of them by looks of things at the moment. So soft. The pound is following suit, basically, same sort of picture, not as far down, a little bit stronger maybe in the bigger picture. I don't have targets as low. We do have the monthly pivot, and the 50 MA may find some support off there. I do not want to be buying it though. Again, anything into these markets at the moment, you can make out a very scruffy old three-wave movement. This may be the fifth wave for the pound, but regardless, I don't want to be trying to be buying these markets again. Any significant retrace is a sell point for me. Unless one of my signals comes up, of course, in which case I'll trade whatever it gives me. But at the moment, it's all southbound. Now, dollar yen. This is normally we see sort of risk off. We see the yen benefiting, well, this isn't risk off at all in that respect. It's just strong dollar, and we're seeing the reflection. It's reflected in this market, and at last we're sort of seeing this sort of continuation. Now this may well push on. It's broken its trend line now on the upper side there, and again, if I was looking to buy it, it's not a currency I trade that much on its own. I say on its own, but obviously with the dollar, but it's not one I trade that often. But if I was looking to buy it, I would be looking for a retracement to be doing something with this. So on all these markets, it's a case of wait for the retrace. Aussie dollar, it's working its way out of its. Everything at the moment is running to say plan, but in terms of the technical analysis that we did here, the channel here, we're seeing this running out of this channel at the moment, and again the Aussie dollar looks like it could be heading south towards those lows. Now of course things could change as we go through this morning, and we often see it that we get a bit of a turnaround, but I'm looking for short positions. So if I get a decent retrace and then a bit of a signal, I will be on it. On the short side, I want to be running with these markets, with these trends. They're running it right across multiple levels. So again, waiting for retracements here on the Aussie. As I don't want to be just jumping into these moves because the law is that you do that and you just sold the bottom. So I want to wait for a bit of discount basically. Right, so that's a similar story right the way across. Gold took a hit yesterday, and you can see it really to be fair, it went into some technical resistance the day before. It ran into its monthly R1 there, found a bit of resistance, came away from that, and it's since now selling off its that's its previous weekly high yesterday, a day before yesterday it had gone into. That held it yesterday, the previous weekly high, and it's selling off at the moment now. It's still in the bigger picture, got higher lows, higher highs. It might find some support soon. I wouldn't want to be buying it yet. It needs to do something like a higher low for me to be thinking that this is the time to get in. At the moment it's looking risky on the long side, easier on the short side, less risk on the short side. Right the way through my range that it had been trading in, that trading range went right, I mean it cut through there yesterday, right the way through it and out the other side. As I said, really, it is this gold picture is still slightly bullish. Big money's been coming out of it for 3 weeks. I will say that, or 7 weeks. 8 weeks or 9 weeks it might have been, but from 7 weeks out of those 9 or 5 out of the 7, whichever, I can't remember which way around it is now, but it's been, the big money's come away from it. Well, it's all money seems to be floating away from it at the moment. Again, strong dollar. Okay, oil's doing okay, and it's into last week's high. It's been into last week's highs, having a reaction. Now we may get yet another reaction to that. There's some divergence across the highs here in terms of using RSI, but look at the moves, and it's sort of that looked like a correction move it had done there, and it's pushing back again on its impulse, and it still looks like it's got potential at the moment. So long as we've got threats with Ukraine, etc., it always puts pressure on the price of oil, and we're seeing that at this stage. Right, let's have a look at the other markets. Fuzzy bid, yep, strong dollar. That's the story. You've got it. Let's have a look at these other markets then. Let's have what time is it? 7:54. I'll look at the indices. I'll take a guess at what's going to happen on the FTSE today. I haven't got any futures on it on here, but from now. But there's no surprise here. CSI 300 dropping. I've been bearish on this market for as long as I can think now. It's from way up here somewhere and beyond. It's still looking bearish. Again, the story is that the equity markets are being sold, and it's right the way through here. We'd be surprised if the FTSE doesn't follow suit when it opens later. I haven't got the futures on that. Futures on the DAX are already down, and I expect this to follow through on the FTSE. Same on the CAC there. So futures across. Look at the Nifty 50. Nifty 50 is held up pretty soundly in comparison, although it did look like it's gapped down there. Closed all the way up here, gapped all the way down to there. So did drop quite considerably. It's hanging in there at the moment, is the answer, but it too could see the rollback. S&P futures here, Jimenez, again selling off, not selling off quite as much as the currencies are selling off in a sense. And one thing with this, yes, we're going to see interest rate increases. That's been expected for a long time. I personally believe these equity markets are probably overbought effectively, and they've probably been overbought for a while, and we're seeing a reaction to that regardless. I mean, the expectation of an interest rate increase has been coming for some months and pointing towards March. So there's nothing really new in that picture. It may be the fact that the Fed have become a little bit more hawkish in their tone, but everything looks to me like further downside here anyway at the moment. So remain bearish. It's bearish. Crypto, bearish. It's dollar strength coming through. I'm still looking at this Bitcoin. I'll put these figures into where next in Bitcoin, and I'll leave this up for now. I hope you don't mind the multicolors. But you got this wave structure it's running in at the moment, and well, yesterday it was looking good at one stage. It pushed up into a high, but I'm not drawn by that, and it's sold off, not massively, but it's sold off at the moment. Now, of course, this could change, and we could start seeing money flows running it back into Bitcoin, and maybe if we do and break back above that sort of 30, well, probably 40,000 area, it might become, well, it's starting to show more of upside, and things could change there. But at the moment, with all of these, I'm sitting there really looking at the bearish side, and until that more significant return or higher low comes through, for me, they're trending down on these bigger time frames. It's no point looking any other way. That's where the flows are. Okay, it's largely brought on by the strong dollar as opposed to anything wrong with the coin. But that's trading there, and when you're comparing it to US dollar, that's what we'll get. So all these markets, even FTM was my golden child for a while, but look, it rolled. It's had a bounce there like the others, but it too is rolling. So it's a similar story through Bitcoin as well. Okay. Okay, a good question there. Do you think for long-term investors there might be some interesting buys? Fuzzy, some people will be, and I can guarantee the retail market, in fact, let's just see if I can update this. Generally, when we see a market, there we go, euro dollar, look, 71% of people buying a euro at the retail market. This is from the brokers that they've run through here, predominantly retail brokers, likes of IG and co. But okay, you always get this with Fibbo Group for some reason. They're completely on the other side of the market most of the time. But you've got this high overall longs already sitting there in the retail, and that's obviously because retail traders are believing that the big boys are going to get in here. Maybe, I don't know, but that's one hell of a shove up on the euro. Other markets are a little bit less. The New Zealand dollar's been long for a long time as well, and the market's still been running south. And these are contrarian figures effectively, because people already, if they're already long, there's no one to get long. And they'll only get squeezed out of the position, so they'll be squeezed against their longs. I think at the moment, looking at what the big money's been doing, it's been shown us for a long time. The equity market has been showing big money coming out. I talk about it regularly to our clients, but I do a proper analysis to it. But that's been coming out for a long time on the equity markets. Money's been moving away from the likes of the euro for quite some time. It's actually, ironically, there is a bit of money in the last couple of weeks been pushing a little way towards the euro. But if I was going to do it, I'd wait. Personally, I'll wait until the signals are showing are clear to me. Whilst the markets are doing what they're doing, to me it's like catching a falling knife, and I don't want to be stopped out 5 times, or just hold into a big position or a position, small position even, whilst it's getting against me by more and more. I'll wait until I don't need to be first one in. So there you go. Hopefully that answers your question there. I'm quite happy to be one of the later ones in and just catch a chunk in the middle. Right, on that note, I'm going to say goodbye. Have a great day. Catch you later. Bye for now.